stocks are dropping, investors are panicking, and I'm kind of loving it. But I'm also getting a lot of questions asking, why are stocks dropping? Why is there so much volatility in the stock market? And what am I doing about it? So I'm going to give my opinion on all those different things. Let's get started. What's up, everybody? My name is Ale and welcome to my world of stocks. Now, just a quick disclaimer, I'm recording this on Thursday night, and depending on how long it takes me to edit, and then my computer is super slow with rendering videos, you may not be watching this video until Friday, and stocks may have dropped even more. And then if you're watching this like even next week, stocks may have dropped even more. So just kind of keep that in mind. But as of today, stocks got hammered pretty bad. So today on Thursday, the tech-heavy NASDAQ took the worst hit, down over 2%. And you might notice one of my biggest stocks there on the loser side on that list, Activision Blizzard, down over 8% today. But we'll talk more about that stock a little later in the video. But first, I want to talk about why the stock market is struggling, why there's so much volatility. So what's going on? Well, I think that there's just a lot of uncertainty still prevalent in the market, and investors don't like that. We're getting higher interest rates, possibly reaching 3% or even higher in the next few years. We're also dealing with a rise in bond yields. We are also dealing with a trade war going on with China. And there's also a lot of uncertainty from the upcoming midterm elections. And then on top of all that, a lot of people are just saying that this is just a healthy correction for an aging bull market. Now, when looking at interest rates in particular, I think that we've had low interest rates for a long time, so it kind of makes sense that we would start to increase them to encourage smarter borrowing. But I can also see the point of view of many other people, and especially the president, who would say that it's happening too quickly. But regardless, interest rates going up in a strong economy is a common way of fighting off inflation, and it encourages smarter borrowing. And you can take this however you want, but the Fed Chairman Jerome Powell, he recently said that the economy is really strong and there isn't much risk of a recession when looking at the next couple years. So I think we'll be fine as long as we're just kind of gradually increasing interest rates. This is a common thing to do. Like I said, when the economy is strong, you want to kind of control borrowing. You don't want people to get overly excited and overly borrow. You want smarter borrowing. You want to fight off inflation. So raising interest rates is a common thing to do. The only question is it going to happen too quickly? Some of that is still speculation, but we'll just kind of have to wait and see. Overall, I think we should probably be fine. But something that is a little bit of a concern for me is the trade war going on with China. Now, for the economy to stay strong, I think you need to have lower taxes, less regulation, and you need to have free trade. We have those first two, but the free trade part we're kind of struggling with right now, and it's leading to other fears just kind of globally as well. If these tariffs get worse, then you're going to have to start worrying about inflation, and people will have to be a lot more cautious with how much money they're spending and where they're spending their money, which could lead to a slowdown in the economy. But I am hopeful that trade talks will resume soon. You got to remember, China is really hurting right now, and historically when China hurts, you know, the US kind of hurts as well right along with it. So you don't really, it doesn't really benefit either side to kind of keep going through this feud. Now, ideally, this will lead to better trade policy in the future, so we should be good. But you know, I think China probably wants to get this resolved because their economy is really struggling. I think this third quarter, they're expected to see even less growth than the previous quarter. And when looking at the US and President Trump, you know, he's going to want to get reelected. He probably doesn't want this to go on too long, although he may not say that. So I think both sides do want to get this resolved. It's just, you know, nobody really wants to back down. So when does this get resolved? You know, I have no idea, but I do think this does get resolved somewhat, hopefully soon. And then this will just be something that just kind of came and went. And I mean, earnings are pretty strong right now too, so it doesn't look like tariffs are really affecting us too bad, but you know, that could change in the near future. And then there's the whole angle of the midterm elections. Now, regardless of what your political views are, and this channel is not political in any way. I don't ever want to have like a political view or like tell you guys what you should believe in. You guys should make your own decisions. But I think if Democrats gain control of Congress, then you risk having higher taxes and maybe even a higher risk of impeachment for President Trump. All of that leads to kind of uncertainty and probably wouldn't be good for the stock market. Now, if Republicans regain control of Congress, then you're probably talking about more permanent tax cuts and maybe even more tax reform going forward, which will help these corporations and ideally help their stock price as well. But just kind of keep that in mind. I think we'll probably see stronger performance in the stock market if Republicans regain control of Congress, and if Democrats win, then maybe there's some more short-term volatility. And then of course there's the whole angle of this is just a healthy correction for an aging bull market. Now my personal opinion is that it's a little bit of all of these. I think every angle that you look at has a pretty strong argument. But I think a lot of these arguments are also short-term noise. I don't think that any of this warrants a stock market crash. I could be wrong, but I don't think it warrants a stock market crash. And I think that the economy is going to continue to be strong. The Fed has even said that they don't expect a recession for the next couple years. I think we're probably going to be good, but there is going to be some short-term volatility. So my opinion and what I'm doing is I'm trying to take advantage of this volatility and average down my stocks as much as possible. And the reason why is because I don't think that any of the fundamentals have changed. And when you're looking at earnings, we're expecting some really strong earnings. I believe we're expecting earnings growth on average of over 20%. And earnings so far have actually been very strong. So I think the fundamentals are still there. I think that this is a lot of noise, and I do think that we will recover, but that's just my opinion, so please don't hold me to that. Oh, and one more thing I want to mention. I was reading another report that was talking about October specifically, but I was looking at a chart on marketwatch.com, and it shows the average price performance for the S&P 500 during a midterm year from 1950 to today. And you can clearly see that we struggled going into October, but then start to recover and perform very well, especially after the elections. So that kind of just reinforces my point that I think a lot of this is just noise, and I do think that we will recover once we kind of get through some of this. It's kind of just like the perfect storm in my opinion. We had the bond yields, we had the rising interest rates, we have the midterm elections, we have an aging bull market. It's like, yeah, of course there was going to be some volatility. But anyway, two of the stocks that I picked up today are Activision Blizzard and Microsoft. But let's just go through some of the stocks today, some of my biggest stocks, and we'll look at some other stocks that have been dropping, especially today. Now, when looking at my biggest stock, Disney, they only dropped around 1% today, and they're still up almost 5% for the week. So I didn't pick up any more of Disney because my cost basis, to be honest with you, my cost basis is under $110, and I don't really want to mess with that. So at least not yet. So I'm just kind of leaving that one alone. Now, Microsoft is my second largest stock, and they only dropped around 2% today, but I'm trying to keep my cost basis with them also under $110. So because they were trading at 108, I went ahead and picked up a few more shares. Now, I always get comments on Microsoft saying that it's too expensive or that everybody's missed the boat on Microsoft, and I just could not disagree more. I think that Microsoft is such a good dividend growth stock, one of my favorite dividend growth stocks, and they're such a big company. They've done so much already, and they continue to enter new markets all the time. And I'm going to talk about Microsoft more in my 3 stocks that I'm investing in video, but Microsoft just recently announced Project xCloud, and if you haven't heard of what that is, it's basically they're taking Xbox consoles, like literally Xbox hardware consoles, and they're having them run a video game, and then with Microsoft Azure, their whole cloud infrastructure, they are streaming those video games to you, to basically your cell phone or your tablet or your laptop or anything else. But you know, the biggest thing is your cell phone, because we talked about how the gaming market is just exploding. We talked about that in other videos, and the segment that is seeing the most growth there is actually mobile gaming. So Microsoft sees this, as they always do. They look at these different emerging markets, and they say, okay, how can we take advantage of that? So now they're using Project xCloud to get this game streaming service to your cell phone. And so basically you would use your cell phone as a screen, and you can attach it to an Xbox controller, and then you can just play video games kind of portably like that on your cell phone. And so these are very high quality games that are running on Xbox hardware, but with Microsoft Azure, they're being streamed to your cell phone, so your cell phone doesn't have to do all the heavy lifting. Now, this isn't going to launch, I think it's expected until 2019, but this is a huge deal, and a lot of people are saying, well, this is gonna hurt Xbox hardware sales, but I think that Microsoft doesn't really care about that. I think Microsoft cares more about, let's tap into this huge mobile gaming market and let's get them into our ecosystem. Let's get them using Xbox Live. Let's get them to sign up for our services, because ultimately what you want to get is games as a service, and I think nobody is really pushing for that more than Microsoft with Xbox. Okay, but enough about Microsoft. Let's look at Nintendo. Nintendo's my third largest stock. They only dropped by a little more than 1% today, and they have a lot of uncertainty going on with them right now, so I didn't really feel like picking up any more Nintendo either. But Activision Blizzard took a massive hit today, biggest hit out of all my stocks, and they were down over 8%. So I did go ahead and pick up more shares of Activision Blizzard because they have their new Call of Duty Black Ops 4 game, and they have a battle royale mode that is getting a lot of praise right now by both gamers and the media, and the press and the media. And I think that it has the potential to be the next Fortnite. Now the only problem is that Fortnite is free, whereas the blackout mode from Call of Duty Black Ops 4 is not free. You have to actually purchase the video game, but I still think that it's going to do extremely well. In fact, I was reading a report that an Oppenheimer analyst reiterated their outperform rating for Activision with a price target of $87 because of this new Call of Duty game. And he stated, "We believe this title's purpose is to engage gamers well beyond 2019 due to upcoming updates and new content across game modes. Moreover, we feel it is a foundation for a much bigger push into esports. We believe it opens opportunities for regular updates and special events across Blackout, multiplayer, or zombies modes, and we believe Activision intends for gamers to stay engaged with Black Ops 4 for several years as the game evolves and adapts to new trends." So in other words, this analyst saw one of my videos and he just repeated everything that I've been saying. No, I'm just kidding. But this analyst talked about esports, right? And in the 3 stocks to buy video, I talked about esports being worth over $1.65 billion by 2021, which represents enormous growth. Now, when looking at why Activision dropped by so much today, because obviously other stocks didn't drop by that much, I couldn't really find much of a reason why. I read several reports and they all kind of said the same thing, but they wouldn't really give any specifics. And most of them just said that investors were looking for even more sales than what they got, which to me makes zero sense because this game is on fire. Now, when looking at how much revenue it's bringing in, it brought in over $500 million in sales in just its first 3 days being out on the market. And it broke records for most combined players, average hours played per player, and total hours played. So I'm not sure why people are panicking and selling off this stock, but I'm picking up all those shares. I'm more than happy to pick them up. And if the market recovers and gets a little more stable, once we get past these midterm elections and all that, all the uncertainty, I think that once, good news starts kind of coming out for Activision, which it's already pouring in, so I don't know why it's selling off, but I think as more and more good news continues to come in for Activision, I think people are going to realize that. We'll probably start investing a lot into Activision. We'll probably get a short squeeze, and I could see this stock climbing quite a bit. But anyway, enough of that. Some other stocks that I was looking at, Facebook dropped almost another 3%, and currently, trading for around $150. I think Facebook looks really attractive to me. Now, another stock that I was looking at here, Amazon, dropped another 3%. And I'm very bullish on them. Under $2,000, I'm very bullish on Amazon. So that's another stock that I'm keeping my eye on, maybe adding to my position. And then Texas Instruments is also looking pretty good. It's a really good dividend growth stock, and they dropped by another 2%. And their price under $100 looks really good to me. Now, some other stocks that I would love to add to my portfolio are some Chinese stocks. Some of these Chinese stocks are trading at very low prices. But the only problem is that I don't see any signs of recovery anytime soon. So I kind of think that they're going to keep trending downward. But some of those stocks like Alibaba, IQ, Tencent, I would love to open up a position on several of those. Now, Alibaba dropped by another 4% today, and they're down close to 20% year to date. Tencent dropped by another 3.6%, and they're down over 30% year to date. And IQ only dropped by around 1.4%, but they're down over 25% in the last 3 months alone. And then another popular Chinese stock, JD.com, dropped by another 1.6%, and they're down over a massive 43% year to date. So anyway, I like those Chinese stocks, but I just don't see signs of recovery yet. I think they're going to continue to drop a little more, but at some point I'm going to have to start maybe opening up a position, especially on like Alibaba. That's a stock that a lot of people like. But anyway, this was just kind of a quick update. I just wanted to give you my random thoughts on this. A lot of people have been like messaging me a lot, like all day, asking me what's going on and wanting me to give my opinion, because I haven't really given my opinion on any of this yet. So anyway, that's how I feel about all of it. I'm using this volatility as opportunities to add to my positions. but I'm also being very careful and being very cautious because I'm realistic. I'm not just out here saying that, oh, you know, none of this will continue, we'll just skyrocket right now. I'm not saying that. I think this could continue for a while and could even be leading to a crash at some point. I don't think that that's going to happen. I'm not on that boat. I know a lot of people are, but I'm not. But I do still think that we will continue to see some volatility. So I just think if I was going to give my opinion on anything, I think that it's much better to wait for these periods of volatility to pick up on dips than it is to, you know, when the stock is like really going up and just buy high and then we get another period of volatility and it drops. Like a lot of people were messaging me today and saying like, oh man, like I'm down on so many of my stocks. Like I'm negative, I'm in the red on so many of my stocks. And you know, some of the reasons why is because people just buy at bad times. You got to find good entry points. But anyway, that's just kind of my opinion. I hope you enjoyed it. If you want to see more videos, then make sure you hit the like button, support the channel by subscribing, and I will catch you in the next video. Have a wonderful, beautiful day and take care. Bye-bye. And be cautious out there. Be careful.